Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Vivek Iyer. Well, Vivek, the screen for now is looking starkly different as compared to where it was yesterday. Of course, the markets have seen a good recovery from the day's lowest points. I think it is at least a 60 to 70 point recovery from the day's lowest point, and the mid-cap end of the market is also outperforming unlike yesterday.
That's right. So after 3 sessions of very lackluster trading, we largely saw supply coming in at higher levels today. We are seeing, at least till now, we still have a couple of hours to go, but so far the market breadth has been quite positive, advances far outpacing the declines. We'll start off with the top headlines. We've got quite a lot lined up on the show. Stocks trade steady with small gains as higher tariffs on steel and aluminium kick in, but progress on a trade deal offers hope. IT and auto gain, while realty drags. Mid-caps relatively fare better.
PI Industries surges over 5% after one of its major customer, Kumai Chemicals, revises its outlook. Revenue outlook revised upwards by 9% and EBITDA by 34%.
The street is seeing a frenzy of block deals with big trades in Aditya Birla Fashion, Alchem Labs, Indigene and Tata Technologies, coming on the back of 5 large trades yesterday, including Ola Electric, Yes Bank and Vodafone Idea.
Sun Pharma Advanced Research shares fall near 18% after a key psoriasis drug fails to meet desired outcomes in trials, resulting in discontinuation of the drug's development.
Chennai Petro all set to set up retail fuel outlets with a 400 crore rupees investment. The company to re-enter into direct fuel retail segment nearly 2 decades after its earlier exit.
Well, 24,600 thereabouts is where the Nifty is at. For now, it's a green-looking screen. That bodes well. As far as the bank Nifty is concerned, it's rather flat, up barely in the green. The advanced decline ratio has been flip-flopping, first in favor of the declines, then in favor of the advances. For now, it is firmly holding in favor of the advances. Apart from that, when we look at some of the sectoral names as well, most of these sectoral indices are in the green. The gains are being led by the Nifty Media Index, wherein, we're seeing very strong gains coming in on Saregama, which is up almost 4.7%. DB Corp also doing quite well, but it's the Nifty Realty pack that is not doing well in today's trading session. We saw most of these names surge higher in the trading session yesterday, but today, unfortunately, the Nifty Realty Index is the only sectoral index in the red. But apart from that, there's a lot of action happening in the mid-cap market. We have our special segment, Mid-Cap Movers. Hormaz is here to take us through all the mid-caps that are moving around in trade. Good afternoon, Hormaz.
Good afternoon, Vamakshi. The advanced decline ratio may be flip-flopping, but for one sector, it is firmly in the advances court, and that is railways. And the railway stocks are continuing to move higher every passing minute. So take a look at IRCON, take a look at Railtel, RVNL, RITES. A few minutes ago, they were up 5 to 6%. Now IRCON's up 13, Railtel's up 12, RVNL and RITES too up 6% each. Again, there's a slew of block deals yesterday, a slew of block deals today as well. There's the impact on the stocks as well. Aditya Birla Fashion is down 10% after the deal. Indigene is down 4.5% after a huge amount of equity changed hands. And Alchem Labs, of course, the promoter entity, set to be the seller there, 2.5% lower there as well. Among the other newsmakers, Spark, of course, the loser of the day, 19% lower now on that stock. PI Industries, after its largest consumer, raised guidance. Garden Reach 2 at one point was up 10%. Still holding on to gains of around 6%. Stocks doing well on the volumes front today. Nava is one of them, at one point up 12.5, 13, still holding on to gains of 10%. IKS and Saregama too seeing good gains on strong volumes in today's session. And lastly, some of the other gainers in today's trade, we get Swiggy and International Gemological Institute up 5%. Swiggy is now up 8%, nearing its IPO price yet again of 390, and PB Fintech too having a good day at the office. Back to you guys.
Well, thank you so much for that, Hormaz. But it's a good time to actually bring in Jay Thakkar from ICICI Securities for a technical check on the market. Good afternoon to you, Jay. This is Vamakshi joining in. So let's first get your take on the markets, because yesterday was not such a great day. Today we're doing well. We've recovered quite a bit from the day's lowest points. Where are we headed from here on?
Hi, very good afternoon to you. Well, I would say that markets are basically, waiting for the, monetary policy is what it really indicates because Nifty has been trading within this range of say 24,400, 300 on the downside to 25,000 to 25,100 on the upside, and that's broadly been the range. I would say, since past couple of trading sessions now. Many a times it attempted to, take off those levels on the upside, maybe not 25,000 to 100 levels, but then it failed. We really witnessed the selling pressure from the higher side, and same is the case with the Bank Nifty also. I mean, if we see out there, then 56,000 to 56,200 range. I'm talking about the spot levels has been continuously acting as a clear resistance or a supply zone. Bank Nifty is unable to surpass those levels, and until we don't see that happening, I mean, the clear momentum on the upside would be lagging. And the Nifty PSU banking stocks, or the overall sector, I would say, is the one which supported the Bank Nifty to in fact hold out to these levels as well as bounce towards the levels of 56,000 recently. Otherwise, most of the private sector banks have really gone sideways and are into a no trade zone, I would say. So most probably Friday is when the markets are likely to provide a breakout. The India VIX since past couple of trading sessions have come down now significantly, and due to which, if you see, the option premiums have fallen quite a lot as far as Nifty is concerned, which clearly indicates that with this falling IVs as well as falling premium, the expiry is also the weekly expiry ahead of the RBI monetary policy is likely to be quite sideways. So I think it's going to be a range bound session one more day tomorrow. Probably on a Friday we'll be seeing a breakout definitely coming out of this range. Especially the Bank Nifty or the Fin Nifty, wherein the consolidating range have now reached to the apex. That is now very very close to the breakout level. So from here on, I have a couple of buy recommendations. Irrespective of the market movement, I think there are a few stocks. One is OFSS. OFSS seems to have broken out from a sideways consolidation, and I think that it's likely to range towards the levels of 9,000 to 9,200 on the lower side. One can place a stop loss on 8,400 and go long on OFSS. I mean, from the IT pack, this is one stock which is expected to bounce back on account of short covering. And the second buy recommendation would be on JSW Energy. I think that this stock is too likely to witness a good short covering. There has been a positive divergence in the momentum indicators, and since it's entering into the FNO, we have seen mainly the short getting built up out here. So there is a high probability this stock bounce back to 520, 530 zones on the upside, and one can place a stop loss at 498 out here.
Jay, thank you so much, for your call on the Nifty as well as your individual stocks. Jay, PSU banks versus private financials, where does your preference lie?
Well, Vivek, I would say first of all, good afternoon to you, Vivek. And Vivek, see, overall, PSU banking pack have been into momentum, and they have provided a fresh breakout, definitely, So one can be out in PSU bank from these levels as well. I mean, a couple of stocks like Indian Bank or Bank of India, even for that matter, Bank of Baroda, are really looking good. And most of the stocks have provided a breakout, indicating or hinting that the probability of an upside breakout is higher. I mean, that's what it's indicating. Private sector banks are mostly in the range, but then if I have to select one out of it, then it would be HDFC Bank, which has been consolidating within a range and of 1915 to 1850. So there has been a range of 100 points. If it breaks out on the upside, I mean, if it would provide a up move until 2050 to 2100 levels. And since past couple of quarters, we have seen FI increasing our stake in HDFC Bank as well. So the stock would witness a good buying at the lower levels as well, or support at the lower levels as well.
Well, thank you so much for that, Jay. But, we are excited to unveil our brand new global business news channel, the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m. Welcome back. You're watching Midcap Radar on CNBC-TV18. Well, pull up the chart for Swiggy because that counter continues to do well in today's trading session. The stock for now is up almost 8%. In fact, in the last 1 month itself, the stock has managed to gain almost 17%, but it still remains somewhere around 41% off from its 52-week high. The other counter is Eternal, of course. There was a brokerage note yesterday. Today, the stock continues to do well, up almost 3%. But moving on then, PI Industries is also another counter that is surging away in trade today after one of its major customer, Kumai Chemicals, has revised its outlook. Ria is here to tell us more on that. Well, Ria, tell us.
Well, yes, Vamakshi, PI Industries has been in focus today. The stock has jumped up almost 5% after a very major customer for the company called Kumai Chemicals has revised its outlook higher for the year ending October 2025. The revenue outlook has been revised upwards by 9% and the EBITDA outlook has been revised upwards by 34%. Now, remember, Kumai Chemical is the biggest customer of PI Industries and even in the March quarter, the results for Kumai Chemicals were better than street expectations. Sales were up around 10%. Operating income also witnessed a surge of around 36%, and even the net profit had jumped up by around 61% compared to the previous year. Now, remember, on the 21st of May, PI Industries had reported quite a weak set of numbers, which is why it was under some selling pressure on that day. The guidance was also weak for the next year. They're guiding for a single-digit revenue growth for the CSM business for FY26, which was below street estimates. So the stock was under selling pressure back then, but today, of course, it's up over 5% after this new development.
Well, Ria, stay on with us, given the fact that, you've highlighted PI Industries for us. It's up 5%, largest customer, increasing its guidance upwards. But the other stock that's building onto gains is actually Garden Reach Shipbuilders. There's a significant news development with the Norwegian company. Give us more details.
Yes, Garden Reach is also in focus today. They've signed an MOU with Norway's Kongsberg to build India's first indigenous polar research vessel, or PRV, and the National Center for Polar and Ocean Research is going to use this vessel for research activities. Now, at the signing of the MOU, Union Minister Sarbananda Sonowal had held a roundtable with Norwegian ship owners, and he has also invited investment into India's maritime sector. What he said is that Indian shipyards currently hold about 11% of the Norwegian ship owners Association order book, and he has also urged for further expansion of orders into India's maritime sector. Now, coming back to what this spells out for GRSE, the order value for this PRV has not been disclosed yet, but the order book for the company remains quite healthy. The current order book, including the recent order for the next-gen corvette, stands at about rupees 47,680 crores, and the stock is up almost 6% today after this new development, and it is up over 70% in the last 1 month as well.
Well, thank you so much for that, Ria. That was Garden Reach Shipbuilders for you. The stock is up almost 6% today, but keep in mind that the stock is also perched at an all-time high. The next counter we'll be focusing on is Sun Pharma Advanced Research, or SPARC. This stock has slumped after one of its key advanced molecules has failed to meet primary endpoints in its phase 2 trial. Ekta has more details.
Thanks for that. Well, yes, both these stocks are in focus, Sun Pharma as well as SPARC. SPARC is the R&D arm, which is listed separately of Sun Pharma. Now, Sun Pharma announced the top-line results from the phase 2 trials of SCD-044, which is basically a molecule under development. It is basically being studied for psoriasis as well as atopic dermatitis. The drug has not met the primary endpoints in either study, and the development of this particular molecule is now being discontinued. No further clinical trials are being planned. Sun Pharma and SPARC will be assessing next steps for the compound going forward. Now, in terms of SPARC, what the impact is that SPARC has licensed the molecule to Sun Pharma, and they were expecting the phase 2 results to come through and were due in Q4 of FY25 and Q1 of FY26. The stock has run up over 70% from March to June of 2025 in anticipation of these results. Now, analysts say that one of the more advanced molecules, this is one of the more advanced molecules in SPARC's pipeline. Now, what will happen going forward will be a couple of key things to watch out for SPARC. Other molecules in their pipeline, for example, SCD-153 or SBO-154. They are also overall looking at cost cutting. They're cutting manpower, for example, by around 30%. The company says that as of December 2020, 2024, said that there is available debt and cost optimization, which will provide them a runway till May of 2025. And the expected milestones were expected to defer the imminent need for fundraising. The stock, however, is down 35% from its 52-week high, which it hit in July of 2024. So these are a couple of key things to watch out for. When exactly will they need to raise funds going forward? What would the other molecules in the pipeline look like for Spark?
Thank you so much for that, Ekta, explaining to us in depth what this particular development means both for Sun Pharma as well as Spark. Spark almost at the low circuit of the session. But the other aspect of the market that's keeping the street very active is the entire frenzy of block deals that we've seen, especially post the result season. The amount as well as the total quantum of block deals have increased quite significantly as far as the secondary market is concerned. Well, yesterday we saw quite a few block deals happen, names like Yes Bank, Idea, all of them saw large trades taking place, and keeping in line with that particular trend, today we have seen 4 large block deals take place. Both our colleague Nimesh as well as myself today in the morning highlighted a few stocks to keep an eye out on account of the fact that there were block deals expected to happen. The first one, of course, was AB Fashion, that is Aditya Birla Fashion. Remember, this is the demerged entity, and one particular entity is yet to be listed. In this particular entity, remember, post the entire corporate action, Flipkart held a little over 6% stake, and we understand that today they have completely exited their stake, as per the term sheet we managed to access last evening. So a block worth over 600 crores actually took our exchange hands in today's block deal window. The other stock in focus was IndusInd. Remember, this particular stock that sits on the cusp of pharma as well as IT. One of the pre-IPO private equity investors, that is Carlyle under the name of CA Dawn, has actually sold their entire little over 10% stake that they held in the company. The total value of the block is over 1,500 crore. The other stock in focus was Tata Technologies. A little surprising over here, given the fact that TPG Rise, one of the largest institutional holders in this particular name, at the end of the March quarter, they held a little over 6% stake, of which they sold 4.9% stake in the month of April. And within a month, they've gone ahead and sold the remainder of the slight over 2% stake that they have. So again, a clean out trade as far as Tata Technologies is concerned. And Alchem Labs, that particular stock, under significant pressure today. This is on account of the fact that the promoter, Jayanti Sinha, offloaded close to 1.4% stake. So Vamakshi, what's actually happening is that private equity investors, promoters, all of them are taking advantage of the liquidity and going ahead and paring stake in the stocks that they own.
Well, we had a slew of block deals yesterday. They continue today. Let's see what tomorrow's session holds. But as we slip into a very short break, here is some good news for our viewers. India's business news leader is now only a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back to Midcap Radar. Well, the markets have continued picking up pace and the recovery continues on a strong footing. But shifting focus, our colleague Abhimanyu spoke with Dixon Technologies' Sunil Vachani on beginning production under the second IT hardware PLI scheme and a potential partnership with Chinese firm HKC. Let's listen in.
Well, the company is part of 5 PLI, as you know, PLI schemes of the Government of India. And that includes mobile phones, that includes telecom, LED lighting, air conditioner. So these are the areas that we have, and of course the IT hardware now. And I'm very happy to say that in all the 5 PLIs, Dixon has been successful in crossing the threshold for the investment as well as the incremental sales. Right. And as far as the IT hardware PLI is concerned, we were one of the first companies to qualify for IT hardware PLI 1.0 and even PLI 2.0. We are very happy to announce that our factory is ready now, is rolling out the trial production, and very soon we'll be starting the commercial production also. And at the same time, we are looking at backward integration as far as IT hardware is concerned, right from very early days.
You're also looking to collaborate with a Chinese company for which we understand you have sought approval under Press Note 3 from the Union government. How hopeful are you over the plans, and what is the plan B in case the approval gets delayed or denied at a later date?
Look, before I answer that, let me explain to you something about the supply chain as far as mobile phone is concerned. So when you're talking about the display technology for mobile phones, you have the Korean companies, you have Taiwanese, and of course you have the Chinese companies. When you're looking at the low-end mobile phones, which is under 15,000 rupees, unfortunately the Korean companies and Taiwanese companies have kind of exited that space of display when you look at the low-end mobile phones. So of course there are large Chinese companies in the space, and we are planning to partner with one of the companies, which is HKC, for making display modules for mobile phones. The application has already been made, and of course there is going to be a case-by-case approval. But we have already started the process of construction of the factory. We have started the process of talking about the designs and layouts. So we are hopeful that we should commence commercial production maybe in the next year or so.
Well, that was the management of Dixon Tech. The stock as of now is trading higher, but so are the benchmark indices. It's green across the screen, but that's all we have on this edition of Midcap Radar from Awake, me and everyone who put this show together. Thank you so much for watching. Don't go anywhere. Your stocks when we return.